delivering the world to your doorstep. From breaking news to in-depth features, from politics to culture, from science to sports. Welcome to SNN Primetime News with Kennedy Lucas Patterson.
Hello everyone, welcome to SNN Primetime News. I'm your anchor Kennedy Lucas Patterson, live here from Atlanta, and here is the latest in primetime news. Now, Jeff Bezos sold $2.4 billion in Amazon shares over the past few trading days. According to a new company disclosure, the tech giant founder has now sold roughly $8.5 billion in Amazon stock this past month. Now, Bezos said to sold about 14 million shares of Amazon stock at prices ranging from $166.41 per share to $170.89 per share between Thursday and Tuesday, as the disclosed in regulatory filing late Tuesday by Amazon. Bezos has sold roughly 50 million shares. Amazon disclosed in its annual report earlier this month that Bezos have adopted to the trading plans to sell up to 50 million shares by January 31st, 2025. The 10b501 trading plan is subject to certain conditions according to the regulatory filings. Bezos steps down as the tech giant's chief executive back in 2021. He did not sell any stock in 2022 and 2023. Now, Bezos still serves at Amazon's executive chair and remains its largest shareholder with more than 939 million shares. Vanguard Group is the second with just over 730 million shares as of the end of 2023.
Good morning, Atlanta. This is SNN by K.L.P. Entertainment. Here's the headline at the top of this hour. Sports streaming platform Fubo TV is suing Disney, Fox and Warner Bros. Discovery over their recently announced joint venture, citing what the company calls extreme suppression of competition in the U.S. sports-focused streaming market, according to a copy of the lawsuit obtained by CNBC. The joint venture, announced earlier this month, aims to offer viewers a new way to access marquee live sports. It's slated to roll out this fall, but several questions remain around its pricing and structure. These horizontal competitors are colluding to create a JV that will cause substantial harm to competition and consumers, the complaint reads. The lawsuit also names Disney-owned ESPN and Hulu as defendants. Each of these companies has consistently engaged in anti-competitive practices that aim to monopolize the market, stifle any form of competition, create higher pricing for subscribers and cheat consumers from deserved choice, Fubo TV CEO David Gandler said in a statement. By joining together to exclusively reserve the rights to distribute a specialized live sports package, we believe these corporations are erecting insurmountable barriers that will effectively block any new competitors from entering the market. A spokesperson for the joint venture declined to comment. Fubo argues Disney, Fox and Warner Bros., which control a significant portion of live sports content in the U.S., imposed bundling requirements and significantly above-market licensing fees on Fubo, inflating prices for consumers. Now, their new joint venture allows the media companies to undercut those prices and avoid the same restrictions on what channels they have to carry, granting them a competitive edge, the lawsuit alleges. As recently as last week, the joint venture was raising eyebrows in the traditional pay TV market, with leaders of major distributors privately voicing concerns that the new skinny bundle would drive up cable TV cancellations, CNBC's Alex Sherman reported. Craig Moffett, an analyst at MoffettNathanson, said at the time antitrust challenges were likely.
Top Wall Street analysts like these three stocks for long-term growth. Inflation worries and concerns around the timing of the Federal Reserve's rate cuts have shaken the market, but attractive stocks are available if you know where to look. Wall Street analysts are ignoring the short-term noise to focus on picking stocks with strong fundamentals and long-term growth potential. Here are 3 stocks favored by the street's top analysts, according to TipRanks, a platform that ranks analysts based on their past performance. We start with fast casual restaurant chain Chipotle Mexican Grill, CMG. The company recently reported better than expected fourth quarter results, as customer traffic at its restaurants maintained its momentum despite ongoing macro pressures. In reaction to the upbeat results, Baird analyst David Tarantino reiterated a buy rating on CMG stock and boosted the price target to $2,850 from $2,650. The analyst noted the company's robust transaction momentum in the fourth quarter, driven by factors like better unit-level execution, enhanced menu promotion, and robust marketing efforts. The analyst thinks that these factors can continue to drive healthy sales for CMG in 2024 and beyond, with management focusing on growing average unit volumes to more than $4 million in the long term, compared to $3 million in 2023. Tarantino noted that CMG aims to ramp up its unit growth to about 10% annually by 2025. He thinks that this pace of unit growth, coupled with mid-single-digit comps, would help the company sustain scarce top-line growth characteristics for many years to come. Tarantino ranks number 321 among more than 8,700 analysts tracked by TipRanks. His ratings have been profitable 65% of the time, with each delivering an average return of 10.8%. See CMG financial statements on TipRanks. Next up is social media giant Meta Platforms, Meta. The company's earnings per share more than tripled in the fourth quarter of 2023 and bolstered investor sentiment for the stock. Moreover, Meta announced its first-ever dividend, backed by its splendid performance and strong cash flows. Impressed by Meta's results, wellness analyst Brian White reaffirmed a buy rating on the stock and significantly raised the price target to $540 from $370. The analyst highlighted the company's accelerated revenue growth, solid operating margin, dividend initiation, and $50 billion stock repurchase plan. While regulatory headwinds persist, White is bullish on Meta as he believes that the company is well positioned to benefit from the digital ad trend, innovate with AI, and leverage a leaner cost structure. The analyst noted that the company is much more efficient now, with its leaner cost structure and efficiency measures expected to continue this year. That said, the company is committed to investing in innovative products and services while enhancing its platform with generative artificial intelligence capabilities, White added. The analyst cautioned that macroeconomic uncertainties and geopolitical tensions might impact ad spending in the upcoming quarters. Nonetheless, he thinks that Meta deserves to trade at a premium to the market and tech sector in the long term, given its impressive sales growth and operating margin. That's our news for this hour. This is SNN Prime.
Good morning, Atlanta. This is SNN by K.L.P. Entertainment. Here's the headline at the top of this hour. Beyond Meat launches new, healthier version of burger in bid to bring back customers. Beyond Meat is launching a new version of its plant-based burger in grocery stores this spring, betting that an even healthier version of its burgers will lure back consumers. The unveiling Wednesday comes at a pivotal time for Beyond as a company. The plant-based meat category, once buzzy, has lost consumers' interest. Retail sales of meat alternatives have fallen 33.6% compared with a year ago as of January 28, according to Circana data. Beyond's retail and restaurant sales have cratered as a result. In the third quarter, its sales had dropped 29% over the past 2 years. The company's market value has also dropped, falling to $463 million, down from a high of $14.14 billion 4.5 years ago. The stock has fallen 60% over the past year. The embattled company has always maintained that its meat substitutes are healthier than the real deal. But Beyond touts that the newest iteration of its beef has less sodium and saturated fat than ever before. The reformulation is the biggest upgrade to its recipe since the burger originally launched in 2016, according to Beyond's CEO Ethan Brown. I think the Beyond IV represents a leap forward, versus an incremental step, Brown told CNBC. The new burger uses avocado oil, cutting its saturated fat by 60% to 2 grams. Beyond also slashed the sodium in the plant-based meat by 20%. The ingredient list is shorter but features other new additions, such as red lentil and faba bean protein. For the last several years, there have been a combination of campaigns and other efforts to try to poison the well regarding the health benefits of plant-based meat, Brown said. In the spirit of iron sharpening iron, we've tried to create products that are now fully unassailable from a health. Critics have attacked plant-based meat from Beyond and its rivals as processed and full of chemicals. Back in November, Brown said on the company's conference call that backers of the campaign to malign plant-based meat as unhealthy were likely members of the meat and pharmaceutical industries. Beyond said that it worked with the Stanford University School of Medicine and registered dietitians, among other experts, to inform the development of the new product.
Ford, UAW reach local labor deal to avert strike at Kentucky plant. Ford and a United Auto Workers local union, UAW Local 62, reached a tentative deal on Wednesday to avert a strike at the automaker's most profitable plant. The UAW had threatened that nearly 9,000 workers at Ford's Kentucky truck plant would strike on Friday if local union demands were not resolved. The UAW said Tuesday that the deal addresses local issues related to skilled trades, ergonomics, and health and safety. Ford said in a statement that it was pleased to have reached a tentative agreement. The Louisville plant is Ford's largest in terms of employment and revenue. Workers at the plant produce Ford Super Duty pickups as well as Ford Expeditions and Lincoln Navigator SUVs. Dozens of local contracts across the big three automakers, Ford, General Motors, and Stellantis, remain in negotiations, according to the UAW. Local contracts differ from the national agreements that the UAW ratified in late 2023 and deal with plant-specific issues.
Delivering the world to your doorstep. From breaking news to in-depth features, from politics to culture, from science to sports. Welcome to SNN Primetime News with Kennedy Lucas Patterson.